Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to do a mid-month look at how the favorites collection has been doing so far.
How is the favorites collection doing?
Well, the 2025 favorites collection index closed up at an all-time high of 143.4% on September 16th last night. Since August 20th, the index has risen every day except for two modest down days on August 27th and September 9th. It really is on a roll. During this period, we have seen gold and silver prices rise, and gold to a brand new all-time high. So you would think that gold and silver favorites would be driving the favorites collection. Well, that's not really the case. P2 Gold, which is both copper and gold, is up 300%. Vista Gold, which is only gold, is up 276%. And Silver North, which is mainly silver, it's up 255%. When I look at the rest of the gold, silver-related favorites, they are generally up less than 140%. And that group is just getting started because we're only about a month into the awakening of a resource junior bull cycle. Now, the bottom fish collection, which has about over 100 companies in it, it's up 106%, and it also has had only a couple of down days since August 20th. Most of the bottom fish are still up on less than 100%, so they're also just barely getting started. One of the better performers has been Almadex Minerals, which is up 312% from 16.5 cents at the start of the year. On Monday, I graduated it to the favorites collection because the main missing piece, namely the absence of a better market profile reflecting its story and its financials, that's no longer the case. Now, there's some confusion I've noted between the Kaiser Research Substack subscription, which costs $10 per month or $100 per year, and the Kaiser Research online subscription, which currently costs $450 for just the remaining 3.5 months so that you can become part of the KRO 450 club. Starting January 1st, that goes to $200 a month or $2,000 a year, and the KRO 450 club will be closed. They will be entitled to renew at the old 450 rate for 2026 and 2027 and beyond. And the reason I'm doing this is most people are not do-it-yourselfers and also don't want to get their head around obscure concepts like a bottom fish, which has missing pieces. Like, why on earth does John Kaiser focus on these bottom-crawling stocks where there's something wrong with them? That's too much to get my head around. So the people who are jumping in right now with only 3.5 months left and paying almost the same as they would pay if they did so in 2026, they're interested in the bottom fish collection, getting in on the Slack forum, and then monitoring our coverage. I mean, we've spent the last 6 months talking about Almadex and explaining, okay, here's what's wrong, here's what could be better. And, those who bought it, they're up 300, 200, 300%, but this stock still has plenty of upside room. Now, one thing a metaphor I've been talking about is, there's this metaphor that the rising tide lifts all boats. But I don't think this will really apply to this sector until 2027, simply because of the longevity of the bear market that began in 2012. The metaphor I prefer is that of all these companies moored inside at the docks, inside a harbor that's relatively calm, and we're seeing individual boats, the crews get their act together, gear up, and they head out to the sea, and the sea is like Columbus back in the 15th century heading out to sea to explore new stuff. This is the metaphor to look at, and that's why the bottom fish collection is so interesting, because these companies are at various stages themselves at waking up, and owning one of these and suffering opportunity costs, that's not what anybody really wants. But noticing that there are signs of life and understanding what the story will be when they do put out to sea, that's the opportunity to go into these things. You may not pay the perfect bottom price, but you're probably not going to, you're going to end up paying less than the ultimate price when it shows up in the favorites collection.
If gold's spectacular uptrend is not the driver, where are the gains coming from?
Unbelievable as it may sound, but they are coming from scandium and rare earths. Sunrise Energy Metals was up 1,751% on September 16th, and last night it jumped another 69 cents to close at $5.04, which means it's up over 2,000%. That is a home run that anybody reading my coverage since the start of 2025 should have seen coming. Aclara Resources is up 316% at $1.87, following recent news that the U.S. International Development Finance Corp will be providing $5 million in funding for its Carina project in Brazil. Now, that makes you do a double take? Yeah, you're justified. Trump's recent hissy fit about Brazil prosecuting and convicting Jair Bolsonaro for insurrection conspiracy, Brazil should be a no-go place. But the fact that they're getting $5 million for the Carina project, which has a meaningful quantity of the heavy rare earths, dysprosium and terbium, that tells you how concerned they are about securing America's needs for these critical metals that China has put on its restricted list. Now, with Sunrise Energy at $5 Australian, it has a market cap or an implied project value of $721 million. And so an obvious question, okay, has this story just about peaked? Is it going to sell off and come down from here? Well, normally I would say, yes, this is way overpriced. At the end of this month, they will publish an updated feasibility study, probably replicating much of the 2016 one, except this time around they're probably going to feed a lot more high-grade scandium ore into the mill. But it's only going to have a similar output capacity of 50 tons per annum. And in their recent press release, they provided an update of their resource, and it was quite stunning. They have in the three categories indicated, measured, and inferred, they have almost 52 million tons at an average grade of 408 grams per ton scandium. Elemental, to get scandium oxide, you have to multiply by 1.534. And in that press release, they used $12.50 per kilogram for scandium oxide as the sort of kind of price that they probably will get. It's double what's being quoted in China, but those are all for very small lots, and you order any of it, you won't get anything. Now, if you do the math, you can see that this in situ resource, before accounting for recovery losses, has $40 billion worth of scandium in the ground. And the rock value, in other words, the in situ value per ton, is $783 per ton. Now, if you're thinking in gold terms, that would be equivalent of coming up with 11 million ounces grading about 7 grams per ton. But of course, that type of comparison is not legitimate because the world annually absorbs almost 100 million ounces of new gold supply each year. That's worth $360 billion at $3,600 gold. In contrast, the annual supply of scandium oxide is estimated to be about 50 tons or 50,000 kilograms, worth only about $62.5 million at $12.50 per kilogram. So obviously, if you're only going to be producing 50 tons, which would literally double the global supply coming from all these byproduct sources, you're not going to get a net present value approaching the current $721 million valuation. So common sense would say this stock has nowhere to go but down unless they bring their nickel cobalt story back to life. But that's only if you think of scandium the way one should think about cesium, gallium, and germanium. Gallium and germanium are part of the restricted list. They are critical inputs to chip technology, but their markets are tiny, and there is no reason for them to ever grow. And they are all byproducts from, major base metal mines. And China has weaponized the supply of these as part of its way to push back against the U.S. Department of War. And there is no use for a massive supply expansion of germanium and gallium. But there is for scandium because of what it can do for the aluminum alloy sector. But the scandium has become critical for this new type of chip technology required for 6G chips, the next generation of transmission. And the U.S. Department of Defense is very concerned about the supply. And the really big news that came out on Monday, which has propelled Sunrise upwards, was a letter of intent that came from the Export-Import Bank of the United States that it may provide up to $67 million U.S. for as financing support for the development of Syerston. And that's about 103 million Australian. And the company in the press release acknowledging this said, well, that's roughly half of what our estimated capex is going to be for the development of Syerston. Now, the problem with all these scandium standalone projects has been twofold. One, there has never been a primary scandium mine, so whatever flow sheet the company has come up with, nobody knows to what extent it will operate when actually in production. And anybody who plans to use scandium oxide to make, say, aluminum alloy, they're not going to do an offtake agreement. So there's been this chicken and egg problem that's been difficult to solve. This press release basically says that the United States government is prepared to crack this chicken egg problem by providing up to half of the capex to put Syerston into production. So, okay, that's great. They'll raise the other half from somewhere else, but to get this thing into production within 15 months. But it's still going to be this smallish thing, maybe worth 200, 300 million NPV. So what keeps the stock from going down? Well, the important thing is there is a huge latent potential demand for aluminum scandium alloy if the price of the scandium can be lower than $12.50. What the United States is going to help fund is, in essence, a pilot plant which will help the company, demonstrate that the flow sheet actually works and start fine-tuning the flow sheet for scaling up later for much bigger. And the United States will probably, as part of providing this funding, and may even ask for all of the output at some fixed price, like, say, $12.50 a kilogram, and just stockpile it or make it available for the sort of a military aluminum scandium alloy parts. And then while all this unfolds, then there will be this offtake demand from the aluminum sector around the world that could allow Syerston to be scaled up much bigger, because this current mining plan is just a fraction of the overall resource, and it is the biggest and richest in the world. So what the market is doing in pricing it at $5 and possibly letting it go even higher is this vision that finally the demand for scandium will end up going into the thousands of tons per annum as it becomes cheap enough and proven to be available on a scalable basis. So that's what's driving up Sunrise Energy Metals and has turned it into a 2,000% performer in the favorites collection.
What other bright spots do you see in the favorites collection?
Well, the ones to watch for right now are ones like Trifecta Gold, Silver North Resources, Inventus Gold, Quartz Mountain, TDG Gold, and A-Mark Resources. These are now all in the midst of programs that they're in the news event zone. So we could any day get, say, a news release from Quartz Mountain showing that the Maestro project, they finally got the angle correct and they're getting the high grades that allow the analogy to the Artemis Blackwater project to be taken seriously. So these ones are all poised to move higher in the next 3 months because of the news flow that's coming. Now, two of the favorites had news out today, which is important for both of them. I've talked a fair bit about Arizona gold and silver, starting especially in mid-August when they put out a fairly short press release about hole 156. And today they published the assays, and it came in at 20.43 meters of 9-gram gold and 34-gram silver. And when you adjust for true width, that's 13 meters. That is the best hole they've hit in the Philadelphia vein in terms of width and grade combined. It did include a 45-gram interval over a meter, and this is also the deepest that the vein has been intersected. So when you look at the grade thickness map, you can see how they've got a part of the Philadelphia vein where the grade thickness is increasing at depth, and they realize they now need to step to the northeast with 100-foot or so step out holes and chase the same depth. Now, the news release to me has had some mixed messages. There was a lot of palpable excitement in management in that mid-August press release, but they did do a financing raise, $2 million at 30 cents, so they were being true geologists, hardened by Mother Nature, disappointing. And there had been suggestions that this hole was kind of like two parts. It sliced through the vein, and the upper part was the style that they have always intersected, and the lower part was a different style, supposedly with a more brownish type color and different type of mineralogy, but that resembled the Oatman, the United Eastern vein in the Oatman district that has yielded 1.5 million ounces of 28 gram per ton average. So really, really high grade. When you looked at the section, you saw that the most of the high grade was in the upper part of the original stuff. And when you got into the lower part, which is supposed to be the Oatman style, there was still decent grade, but it wasn't up there in that 20 to 30 gram per ton range. And Greg Hahn made this statement, I don't believe we have seen the heart of the system yet. And however, for the past 6 weeks or so, we have heard statements as I think we're finally into the boiling zone. So it is still deeper. They're on the threshold. They have not yet confirmed that this transitions into Oatman style. But what we do see is the trend of the grade increasing. They also made a statement that they're considering submitting the last 3 holes for metallic screen assays. They have observed visible gold, not the kind you see 4 feet away looking at a core box, but the kind you need a hand lens to look at. But what the market's reading from this is, the grades are lower than they expected. They had higher expectations. So the stock got up into 45 cents. It's of course churning right now, and the reason it hasn't gone higher yet is that we still don't have that super green light that the lower 300 meters is where this thing is going to blossom into a high grade, maybe 2 million ounce Oatman style deposit. But the trend is there. The next holes, they resume drilling in October. They'll do those step outs to the northeast, which they realize is where they should go. And if they get those done, they can always step in the southwest direction and see what happens there. But the key thing is the 200-acre disturbance permit for which they have applied. They're hopeful they can get it by the end of this year. This would allow them to have 16 drill pads on the BLO land, and then they can drill this vein system at any angle that they want. So for now, we will not really test the deeper boiling zone hypothesis until they get that permit, and it will be in the new year that they would probably then have multiple rigs on there pounding away, testing the deeper 300 meters, which they can't quite chase from where the current permitted drill pads are.
What's the news about Nevada Organic Phosphate?
Well, there's an overlap with the BLM. It's been extremely frustrating. Right around now, last year, they should have received their drill permit for their phosphate lease application on the Murdoch Mountain project in northeastern Nevada. But they got jerked around back then, and by the time they were given the go-ahead, then the sage grouse nesting season for the non-existent sage grouse in this area, which starts November 1st till the end of March, that kicked in, so they couldn't get their drill program done to test the phosphorite bed that is the target at Murdoch Mountain. And then this year, when they thought they could start in April, there were all kinds of other complications, like a wildlife district getting concerned that why are there no sage grouse in this area? You know, we circled the big area here and said this is sage grouse habitat, and it's of course right next to the Union Pacific rail line, and everybody knows that the U.S. Forest Service doesn't like drilling to happen during nesting season, during the within 5 miles of where a nest is. And here we have this whole target area. Murdoch Mountain is less than 5 miles, and we have this Union Pacific train rumbling by. Well, the sage grouse are not going to nest where there's disturbing noise all the time, just like the drill going for maybe 3 weeks might disturb them during the drill season. So there's this insane irrationality within the whole permitting wildlife system. But yesterday they finally got the go-ahead. Yes, you can do your program. And they have to do this program because they have 2 years to demonstrate that there is a potentially economic resource on this project. And you have to do this outside this sage grouse nesting season. So the stock's been sort of stuck 3.5 cents, 4.5 cents. It's 5 cents today. Of course, they need to raise money. They have basically 2 weeks to do it because October 31st is coming soon. There's 12 holes that they have planned. They'll be mainly in a linear direction, and the trick is to prove, well, get maybe 50 meters away from the weathered outcrop. What is the actual grade? Is it up there in this sort of 12 to 18% P2O5 range? What is the thickness? Is it relatively consistent between all the holes? And very importantly, does the low heavy metal assays that they got for the outcropping part, which is way below the heavy metal index maximum that the U.S. FDA insists on for putting any of these fertilizers onto fields, is it still below that? This drill program is, if they get the money, and they'll probably do a nickel financing with a warrant with an acceleration clause. They'll start drilling probably by the end of the first week of October. They think they can get these relatively shallow holes done within 3 weeks, and we should start getting visuals sort of by early November, and the assays by December, and then possibly a resource estimate in the first quarter of next year. But key will be these idea, is this like a coal seam that is consistent, that you can mine underground? What is the grade going to be? If it's high, that's not really a good thing, because there's a level above which, because this is going to be a whole earth organic phosphate that you just grind up and dump on the fields as it is. If it's too high, they'll have to blend it to reduce it so that it doesn't burn the crops. Anyways, this story is finally alive and has a chance after this incredible journey of permitting. And phosphate leases are different than metallic claims. It's like for the same as oil and gas and coal, even though that doesn't make any sense. They spent over $1 million jumping through all the hoops and suffering all these delays. And to add insult to injury, last week when they made a decision, instead of just telling them to come pick it up, they mailed it and wouldn't tell them what the decision was. So they had to wait until the snail mail arrived to find out whether or not they had permission to start drilling.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.